How do you assess the state of the US economy after a year of Donald Trump?
Well, I don't know if I put it down to Donald Trump, but it's certainly been a very good year. You know, US growth is 2.5% last year, up from 1.5%. We've had 2 million of new jobs created. The unemployment rate has come down from 4.7 to 4.1. So on your traditional economic metrics, it looks very, very strong. There's no doubt that there is a bit more optimism in the business community. The tax cuts, obviously, were long talked about, finally arrived at the end of the year. There's also deregulation in the wind. We haven't really seen anything concrete yet, but I think that's given an optimism to business that frankly didn't exist a year ago.
Yeah, if we'd been sitting here this time last year, we'd have probably been talking about protectionism and the risks of a trade war. That hasn't really happened yet, has it?
I mean, it's been fascinating because, of course, that was what he campaigned on, and yet actually trade has done quite well last year. Global trade actually has increased pretty markedly. So despite the rhetoric, the trade story hasn't played out. Of course, there's much more discussion right now around NAFTA and potential discussions with the Chinese. So I wouldn't say we're sort of out of the woods in that regard. But no, from a trade point of view, last year actually was a good year. There is a question mark as to whether the tax cuts will create some sort of bubbles, create some pressure, and of course require the Federal Reserve to raise interest rates by more than markets are expecting.
Well, quite, and we've got a new chairman of the Fed, Jay Powell. Yes. Is this going to be a marked change of tactic from the Janet Yellen era?
I really don't think so. I mean, the Fed has done a phenomenally good job in terms of communicating their strategy, gradual rises. Of course, Powell was part of that. So I think to see any dramatic change is very unlikely. Having said all of that, you know, the Fed is still projecting more rate rises than the market is expecting, and so there's got to be some adjustment there. Importantly, financial conditions in the US remain very easy, and unless we see either higher bond yields or stock markets sort of taking a pause, it's perfectly possible they have to be much tougher around their signalling on monetary policy, and maybe they're perceived as being more hawkish. So I think there is some risks that Powell comes in and is more aggressive around wanting to raise interest rates.